Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. And for the first time, this is now my alternative bullish scenario where we're looking for a wave 5 to the upside, where the most common target for a wave 5 is between 98k and 174k. The main reason this is now an alternative scenario has to do with the vertical line on the chart, which is a fib time taken from the low of 1 to the high of 1 to the low of wave 4. In Elliott waves, wave 1 and wave 5 do have a time relationship, and with this fib time, I'm comparing the time it takes to develop wave 5 with the time it took to develop wave 1. Now, usually that relationship is about the 1-to-1, which is the line that you see. You can extend it to the 1.618, which then results to October this year. But as you can see, price is only at 30k and far away from the targets of a wave 5, but it did already cross the 1-to-1 fib time, meaning this potential wave 5 is already longer in time than the whole completion of this wave 1, which is not something that I like to see. Therefore, my then macro bullish preferred scenario is that this over here is a finished wave 1, followed then by a finished wave 2, and this is the beginning of a bigger wave 3 towards the upside. Now, you can see that this wave 4 is shorter in time than this wave 2, and usually in Elliott waves, most commonly at least, wave 4 takes more time to form compared to a wave 2. Now, there is a little bit of discussion if this yellow wave 1 can move to the right side and this wave 2 to the right side as well, but I do like this structure as an impulse. But we shouldn't forget this is also a scenario where then this is a wave 1, 2, 3, 4, 5, and now wave 4 is longer in time to wave 2, which is actually nice. And it might also be nice if we look at the fib times on the chart, because if you put the pivots over here for wave 1 and wave 2 and you pull a fib time from the lows at 3k to the high of 69k, you double click over here, you will see that the wave 2 is shorter than the 0.382 fib time, meaning that this structure to the downside is less than 38% of the time it took to develop this wave 1, which is very short. Usually, I like corrective structures to at least finish after the 0.382 because it is actually quite rare to have corrective structures finish before the 0.382. It does happen sometimes, but it is still rare. So in this scenario, this would be quite rare still for then a bigger push to the upside. But if you would move this wave 1 to the right, this wave 2 to the right as well, and you also then change the pivot of the fib time, because now this is the low of the bear market and we're looking to 69k. We move the fib time pivot, the beginning, from 3k to the COVID dump over here at 4k. And now you see that the low of wave 2 is then made right on top of the 0.618 fib time, which is fine for a wave 2. So it's very, very, very interesting. It doesn't change the result of this scenario that we are going to be looking for more upside in a bigger wave 3. If we then go to the bearish scenario, then again we have 5 waves to the upside, but then we have a bigger 3-wave corrective structure to the downside, where inside this wave X we're going to be looking at a 3-wave structure in a zigzag, which then is an ABC structure, where we have incredible resistance right above where price is at the moment. The fibs that you see over here are taken from the all-time high to 15.4k, and the golden pocket is in confluence with the point of control of this volume profile at about 40k, and the 786 is in confluence with the value area high at about 50k. So the area between 40 and 50k is massive resistance for price, for then potentially the high of this wave X, looking then for a move towards the downside in wave Y. And if we then talk about macro support, then the support we have over here is incredible as well. The fibs that you see are pulled from the low at 3k to the high at 69k, and you can see that the golden pocket is in perfect confluence with the value area high of this multi-year range. That is massive support at around 9.7k, and then also the most common target area for wave Y is then between the 1 and the 1.236 if price manages to get close towards the 786, because you pull it from the high to the low of W to the potential high of X, and then the target area for wave Y would be in confluence with the golden pocket and the value area high, which is incredible. So the main resistance for price on a macro scale is between 40 and 50k. The main support is between around 12k and 8k. If we then go to the daily time frame and zoom in just a little bit, this is currently an alternative scenario that I have. This is an alternative bullish scenario where we have a wave 1, 2, then another wave 1, 2 for then a bigger 3 towards the upside. The main reason this is an alternative has to do with time again, as this wave 2 over here is longer in time than this wave 2. However, the blue count is a lower degree count compared to the green count. So in green, we have a 1, 2, and then a bigger 3, 4, 5. And then inside the green wave 3, we have the blue count, which is a 1, 2, 3, 4, 5. Now, if you have a higher degree and a lower degree count, what you want to see is that the lower degree waves are going to take less time than the higher degree waves. However, you can clearly see that this wave 2 is much longer in time compared to the green wave 2 over here, meaning that the lower degree wave 2 corrective structure is longer in time than the higher degree wave 2, which is not something that you like to see, and is the main reason why for me this is an alternative scenario. Also, if we look at a wave 2, the most common targets for a wave 2 from a fit perspective is between the 0.5 and the 0.786, pulled from the low of the green wave 2 to the high of the blue wave 1. And as you can see on the log scale, this wave 2 missed out on just hitting the 0.5. It did hit the 0.382, which is a rare target for a wave 2, but it didn't hit one of the common targets. However, if we do go to the linear scale, you do see that the 0.5 has been hit on the linear scale, so that is still then valid, but the same problem applies, that this wave 2 is simply too long for a lower degree wave 2, which doesn't really fit a nice one-to-one scenario. If we then go to my preferred scenario on the daily time frame over here, then I'm looking at this wave to the upside to be part of a wave 1 or A, followed then by a corrective wave 2 or B, and then we're looking for either a wave 3 or a wave C towards the upside. Now on the logarithmic scale, you can see that the price over here did not even reach the 0.382, which usually is a minimum target for both a wave 2 and a wave B. Now for a wave B, the 382 is a common target. For a wave 2, the 382 is a rare target. And the 0.5 is a common target for both a wave 2 and a wave B, which is a nice confluence with this blue target box, the support area between 21.8k and 22.6k. You also see FIB times on the chart pulled from the low at 15.4k to the high that we have, which is then a wave 1 or a wave A, to compare the time it took to develop the wave towards the upside to this corrective structure. And you can see that this low over here has been made at least past the 0.382, so that's something. It's just unfortunate that on the logarithmic scale it didn't even touch the 0.382, which is quite rare. But then if we go to the linear scale, then you can see that price bounced perfectly on the 0.382, which again is more commonly a wave B target from a probabilities point of view than a wave 2 target for then a big bounce towards the upside. Where if we then do look towards the upside, if this is a wave C to the upside, then the most common target for a wave C is between the 1 and the 1.236, taken from the low to the high of A to the low of B, which is between 40k and 44k. And remember, what is at around 40k? It is that point of control and the golden pocket on the macro time frame. Now, you do want to usually see a wave C being quite similar in time compared to a wave A, meaning that the one-to-one that you see in purple over here is the exact length of wave A compared then to a wave C. So preferably you'd like to say see wave C finish somewhere over here. However, if price is going to push towards the upside much more impulsively and also reaches even the 1.618, it is much more likely we are in an impulsive structure of a wave 1, 2, and then a bigger 3 to the upside. So this is very interesting. Now, I don't really like the fact that on the logarithmic scale we didn't hit the 0.382. That's quite unfortunate. However, from a linear scale point of view, this can be the low and the beginning of a bigger structure towards the upside. And based on the price action that we get more locally, and that's of course something I talk about all the time in my daily updates, we can see and measure the probabilities of potentially going down once more to reach that logarithmic target over here, or if the probabilities are higher, for price to just continue to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.